Hello everyone, thank you for joining today's session. What I'm about to share is the story of a company that's fundamentally rebuilding how trading works, powered by artificial intelligence. That company is AurenixAI. We believe the future of trading won't just be influenced by AI, it will be driven by it. And AurenixAI isn't preparing for that future, it's already operating inside it. Today, I'll take you through the core mechanics behind how AurenixAI works, how it's fundamentally different from traditional trading systems, and why it deserves a second look and a deeper rethink in this new era. To understand AurenixAI, we need to understand the era it was built for. We're not just witnessing another tech wave, we're living through a global, structural rewrite of entire industries led by AI. A few key figures help put this in perspective. By 2033, the global AI market is projected to reach $5.1 trillion, with a compound annual growth rate of 37.44%. 84% of business leaders, according to Accenture, say AI is critical to remaining competitive. 91% of institutional investors, per PwC, are still increasing their exposure to AI sectors. And studies suggest that up to 48% of white-collar tasks could be replaced by AI in the next decade. This isn't about whether to use AI, it's about whether we can adapt fast enough. From autonomous driving, financial trading, AI-generated content, code writing, and cybersecurity, to cancer diagnostics, logistics, and legal services, AI is already transforming every high-value sector. But this shift isn't just about faster tools or higher efficiency. What we're seeing is a complete rebuild of industry foundations, powered by intelligent systems. This is intelligent infrastructure, and it's evolving fast. In finance, AI has moved far beyond its early role as an analytics assistant. Today, it actively drives strategic decision-making, real-time execution, and is reconfiguring the entire structure of how trading is done. Some numbers from Prekin. By 2025, AI in financial markets is expected to exceed $40 billion. By 2034, it's projected to reach over $611 billion. Meanwhile, in the world's largest financial market, the US equity market, over 70% of trades are now executed by algorithms. This tells us something fundamental. Modern trading isn't about who spots the opportunity, it's about who reacts faster, executes cleaner, and structures smarter. AI, today, is the strongest force across all three. Now, let's talk about the founder of AurenixAI, Alan Ang. He's a rare blend, part market practitioner, part systems architect. He's built strategies, led execution teams, and understands both how markets move and how infrastructure must be designed to scale. Over the past decade, Alan has led the design and evolution of multiple automated trading systems, spanning both traditional finance and digital assets. He's fluent across the full stack, from data analytics and strategy modeling to execution and risk controls. But what truly defines him is this: Alan doesn't operate in theory. He thrives on turning complexity into structure and builds systems that hold up in the chaos of live trading. Many of AurenixAI's foundational design philosophies are grounded in his hands-on experience and long-cycle architectural thinking. So, what exactly is AurenixAI? At its core, it's an AI-native quantitative trading firm, but not in the conventional sense of running a few opaque strategies. AurenixAI has built a full-stack, intelligent trading infrastructure, covering everything from strategy generation and selection to optimization and execution. Our current focus is on US equities and cryptocurrencies, but the system is fully designed for cross-asset, cross-market expansion. If we had to summarize AurenixAI in 3 words, they would be systematic, efficient, low intervention. All major processes are automated, reducing noise from human decision-making. And we design around 2 core pillars: stability and control. Because in real-world trading, being right isn't the hardest part, executing well is. Here's how the AurenixAI trading engine actually operates. It doesn't rely on a single model or even a few strategies. Instead, it's powered by a fully automated intelligent trading pipeline, a closed-loop system that learns, evolves, and improves continuously. Step 1. Strategy generation. The system generates a massive number of trading strategies. It can generate over 200,000 strategies per second, spanning different factors, time frames, asset types, and structures. Step 2. Backtesting. Every generated strategy is immediately tested through a backtest engine, using 10 years of historical data across multiple dimensions. Only the strongest winning strategies survive. The rest are filtered out. Step 3. Stress testing. Even if a strategy passes backtesting, it must survive a collision test. We simulate extreme market conditions, sharp volatility, price gaps, slippage anomalies, signal delays. We test for execution stability under non-ideal market conditions. Only after passing these 3 filters does a strategy move forward, and that next stage is what we'll cover on the following slide. We just discussed strategy generation, backtesting, and stress testing. Now, let's walk through the next 3 stages. Step 4. Simulated deployment. Even after all those tests, no strategy is launched directly into live trading. Trades are simulated using real-time data, but with no real capital involved. This helps verify whether the strategy behaves consistently in real conditions before going live. Step 5. Portfolio optimization. Strategies that prove stable don't run in isolation. They're grouped into a dynamic asset pool, where the system dynamically adjusts weights to the strategies based on how they complement each other, spread risk, and reduce overlap. Step 6. Live execution plus feedback learning. Only after passing 5 steps does a strategy enter real market execution. But even then, the process doesn't stop. The system continuously monitors real-time performance. Are results aligning with expectations? Are market conditions interfering? Is execution efficiency up to standard? All feedback is looped back into the database, used for future evolution and structural improvements. This is AurenixAI's end-to-end trading workflow, from strategy generation to feedback-driven learning, AI-driven at every stage. It's not a static execution machine. It's a learning system, evolving daily. Every trade contributes to future intelligence. So, why does the system run so efficiently and stably? The answer lies in its architecture. Let's unpack that next. The reason AurenixAI's trading workflow is so robust comes down to its architecture. The system consists of 4 core modules, each serving a critical role and operating in deep coordination. Strategy engine. This is the system's origin point. It generates a large sample of high-dimensional strategies at scale, and this is how the system stays fast, adaptive, and diverse in its thinking. Backtesting engine. Every generated strategy is routed here. It's a high-speed validation platform that supports multi-factor, multi-timeframe, multi-asset testing. It's not about finding what looks best. It's about finding what runs well across different structures. Analytics engine. Next, the system analyzes behavioral patterns in the strategy. Signal strength, correlation with market volatility, structural adaptability. These insights determine short-term viability and also inform future portfolio construction. Execution engine, the final layer and closest to the market. This engine dynamically adjusts execution based on live conditions. Its job is to ensure real-world trading remains fast, stable, and resilient. Together, these 4 modules form an integrated architecture. They evolve independently, but also co-learn. Each component can evolve or be replaced without destabilizing the system. This means the architecture itself is future adaptive, resistant to failure, and responsive to market shifts. So far, we've talked about AurenixAI's pipeline, how strategies are generated and executed. But workflows alone aren't enough. The key to real performance lies in how the system makes decisions. AurenixAI doesn't rely on any fixed strategy. It operates on a structured decision-making framework, one that dynamically generates, filters, and assembles strategies, all based on evolving market dynamics. And most importantly, it's not about picking a good strategy. It's about building a structure that evolves intelligently. In the next few pages, we'll walk through some of these analytical modules and show you how they actually shape live execution. Let's start with the first analytical module, Adaptive Execution Analysis. Adaptive execution analysis answers a critical question. How do we execute trades more precisely, not all at once, but in stages, to better control risk and timing? The system doesn't dump a full position into the market all at once. Instead, it breaks every trade into multiple execution phases. Each phase has its own trigger and decision criteria. Nothing is prefixed or rigid. As the market shifts in real time, the system adapts, deciding whether to continue, pause, or escalate. Every phase is evaluated based on data points like average return, win rate, trigger frequency, and historical sample size. Only phases that show statistically strong, repeatable outcomes are kept. the rest are cut. The result? A flexible, data-proven execution path, not based on gut instinct, but on clear boundaries and logic. It's about removing guesswork and replacing it with structure. Here's a real-world strategy analyzed using adaptive execution analysis. The system broke it into multiple phases and evaluated each one independently. Let's walk through the results. Phase 1, most frequently triggered, over 5,300 times in 10 years. Average expected return, $5,846. This is the system's core engine, stable, frequent, reliable. It doesn't offer the highest return, but it's the most consistent and structurally sound. Phase 2, higher average return, $7,631. Lower frequency, fewer opportunities to trigger. This phase adds punch, used as a weighted complement to Phase 1 during high conviction windows. Phase 3, return rises again, $8,474. Even fewer triggers. This is a high reward, low frequency zone. The system engages this phase only when specific high probability conditions are met. Phase 4 and beyond. Average expected returns decline significantly compared to Phase 3. Trigger frequency over 10 years is extremely low, only 97 times in Phase 4, 14 times in Phase 5, and just 1 time in Phase 6. Total profit contribution is negligible, despite occasional higher win rates. Conclusion? The system caps execution at Phase 3, sacrificing theoretical upside in later phases to preserve stability, repeatability, and efficient capital use. Next, we look at the second analytical module, time of day strategy analysis. Why does time matter? Because in real markets, signals are not evenly distributed. Some of the best signals appear only in specific time windows. AurenixAI breaks each trading day into distinct segments, sometimes by the hour, sometimes around market events. Each segment is independently analyzed for signal quality, execution efficiency, and risk to reward stability. This allows the system to prioritize the right trades at the right time, instead of treating every moment as equal. Let's now shift to a real-world example, one that shows how the same strategy can perform very differently depending on when it's executed. The AurenixAI system breaks the trading day into time windows and analyzes each one separately. And here's what it found. Some time windows consistently deliver stronger signals, better execution, and cleaner outcomes than others. Let's look at 3 examples. First, 4 to 6. This was the strongest window overall. It had the highest average returns, a strong win rate, and very clear directional signals. So naturally, the system increases exposure during this period. Next, 6 to 9. Here, the market is usually quieter, less volatile, less noisy. But that's exactly what makes this window valuable for steady, trend-following strategies. The system prefers to run lower frequency, more stable plays here, not chasing speed, but consistency. Last, 10 to 12. This window had a much lower signal quality, more volatility, and inconsistent returns. So the system actively reduces execution, and in some cases, skips it altogether. The key takeaway here is simple. It's not just about having a good strategy, it's about executing it at the right time. Next, let's move into the third analytical module, something we call behavioral pattern detection. This module is designed to answer one question: can we find repeatable rhythms in market behavior and turn them into an edge? Now, this used to be the domain of trader intuition, people saying, hey, when I see this happen, the market usually does that. But AurenixAI doesn't rely on hunches. It tracks these patterns across millions of data points and asks 3 things. First, does a specific behavior repeat often enough to be meaningful? If it's rare, we can't trust it. If it's frequent, it might be useful. Second, what tends to happen after that behavior shows up? Does the market usually move in a certain direction or stay range-bound? And third, does that movement actually translate into profits? Just because something repeats doesn't mean it's valuable. We only keep patterns that show a clear link to outcome. And once a pattern checks those boxes, the system adds it into its logic, helping improve both timing and structure in live execution. This isn't about predicting the market. It's about recognizing behavior and responding systematically. Now, let's look at how this plays out in a real example. This slide shows how AurenixAI finds subtle behavioral signals and turns them into real trading decisions. In the first analysis, the system asked, how long should we wait to re-enter the market after it hits a local high? So it measured return outcomes based on time elapsed since the last high. What did it find? If the trade occurred 60 minutes or more after a high, returns were the best, over $6,900 on average. But the trade occurred within 30 to 60 minutes after a high, you're more likely to lose money. Returns were negative. The system concluded, after a market runs hot, it needs a certain period of time to cool. In the second analysis, the system didn't just look at the market, it looked at itself. It asked, how long after closing a trade should I jump back in? And again, data gave a clear answer. The best results came when it re-entered after 20 to 30 minutes, over $8,100 in average returns. 5 to 20 minutes also worked well, but beyond 60 minutes, there were 0 samples in the backtest, meaning this scenario simply never appeared, so no trades were executed. So what does this tell us? The system isn't just reacting to markets, it's learning its own rhythm and choosing when not to act. This is what it means to trade with structure, not speed, not guesswork, but with adaptive timing built from real-world data. Now that we've walked through how each analytical module works on its own, let's go one level deeper, how these analytical modules work together. One of AurenixAI's key design philosophies is this: we don't rely on a single analysis to carry the whole system. Instead, we connect multiple analyses to form a stronger decision framework. Here, the structure combines time-of-day strategy with adaptive execution analysis. What does that mean in practice? It means the system isn't just asking, is this a good time to trade? It's also asking, if I do trade, how far should I go? How many stages should I execute? Why does this matter? Because market rhythm changes drastically depending on the time of day. Some windows have clean signals and clear direction. These are worth leaning into. Other periods are noisy, choppy, or structurally unstable, and should be avoided altogether. By combining modules, the system can make 2-layered decisions: be aggressive when the conditions are high quality, and completely shut down when signals are uncertain. This gives AurenixAI the ability to trade like a disciplined operator, not just reacting, but actively filtering for high-conviction opportunities. So how does this composite logic perform in the real world? Let's walk through some actual system data. First, high-quality time windows. Let's take the early US market session, 5 to 5:30 a.m. This window consistently shows strong movement and clear direction. During this time, the system activates full execution phases. Not only does it initiate trades, it progressively scales up as signals remain strong. In this window, the highest performing single-stage return topped $30,000, and those results repeated across multiple backtests. That tells us one thing: the system has learned that this is a time worth leaning into, not just profitable, but consistent and scalable. Now let's contrast that with lower quality time windows. For example, midday from 11 a.m. to 1 p.m. or late afternoon. These periods tend to show messy signals, frequent reversals, and lower directional clarity. Take 12 to 12:30 as an example. 3 consecutive execution phases all posted negative returns. How does the system respond? Simple, it skips them. Not because it's scared to lose money, but because it recognizes structural weakness. It detects too few data samples, volatile win rates, and weak, non-repeatable signals. The logic is clear. It's not that there are no signals, it's that the signals aren't worth executing. Finally, let's look at the system's dispatch mechanism. This entire composite structure isn't hard-coded. It's generated dynamically, in real time, based on current market conditions, historical performance, and live signal strength. Sometimes, the system will run all execution phases. Other times, it won't even start phase 1, because it's already made the call. This moment isn't worth trading. That's the real takeaway of this page. AurenixAI isn't built to trade more. It's built to trade smarter, and only when it truly matters. Now, let's take a step back and ask a bigger question. Why do investors trust AurenixAI? In the world of AI trading, a lot of people focus on models, strategies, and algorithms. But in reality, trust is not built on buzzwords. It's built on structure, proof, and control. Here are the 5 reasons why professionals choose to work with us. 1. Rigorous strategy selection. Every strategy must pass both historical testing and real market validation. If it fails either, we scrap it. There's no room for guesswork. 2. Risk control is not an add-on, it's embedded. When volatility spikes, the system will automatically reduce exposure, stop out, or even pause trading. It's not about maximizing gains. It's about always staying within a controlled risk boundary. 3. The system learns every day. It's not a static model. AurenixAI analyzes thousands of trades daily, refining parameters and evolving its own logic continuously. 4. Native scalability. Whether it's small-cap stocks, crypto assets, or cross-market portfolios, the infrastructure is built to adapt and expand. 5. Transparent decision-making. This one matters most to institutions. We don't believe in black box trading. Every trade, every signal, every trigger is backed by clear data and logic. You can trace it, monitor it, and explain it. At the end of the day, investors choose AurenixAI not because it's mysterious, but because it's understandable and controllable. Now, let's talk about growth and structure. Everything we've shown today, the analysis, the execution, the system intelligence is already live. This is not a prototype, it's a real system, running in real markets, under real conditions. And from day one, we didn't just build for one market. We designed for global reach, across time zones, regions, and asset classes. That's why we've already secured multiple regulatory licenses, an international crypto operations license from the Anjuan Offshore Finance Authority, AOFA, and the Money Services Business Registration with the United States Financial Crimes Enforcement Network, FinCEN, MSP. These aren't just regulatory badges. They're what allow AurenixAI to operate legally and stably across jurisdictions, with 24/7 infrastructure and cross-border alignment. So when you see AurenixAI today, you're not just seeing a technical system, you're seeing a company built on structure, scale, and legal clarity, all ready to scale further. If what we've built is a mature AI trading system today, then the next step is clear. We scale it, we deepen it. Here's how we're doing that. Phase 1. Starting late 2025, we'll focus on US small-cap equities, targeting high-growth opportunities using AI for pattern recognition and risk calibration. Phase 2. Early 2026, we'll enter 24/7 digital asset markets, applying high-frequency AI optimization and volatility adaptation. Phase 3. By end of 2026, we expand into mid- and large-cap blue-chip equities, aiming for stable, moderate yield structures with high execution reliability. Phase 4. From 2027 onward, we enter multi-asset portfolio management, including ETFs, options, cryptocurrencies, FX, futures, and more. But it's not just about more markets. It's about deeper structure and smarter scalability. Every step has a clear logic and long-term architectural value. Now let's bring it home. A lot of people talk about using AI as a tool, but for us, AI isn't a tool, it's a structural worldview. From the start, AurenixAI wasn't built to use AI for better decisions. It was built for AI to be the decision maker itself. How are strategies generated? How are signals executed? How is risk controlled? When does the system evolve? Every piece of this system is AI-driven, self-learning, and self-correcting. We don't focus on guessing where the market is going. We focus on redesigning how we participate in it. It's not about making more trades. It's about making the right trades, with structure, rhythm, and feedback. And that's why this system keeps improving across market cycles, conditions, and environments. AurenixAI isn't adapting to the future. It's shaping the way trading will work in that future. So, what we've shared today is a real, live AI trading system, one that's continuously evolving and already in market. AurenixAI doesn't tell stories. We build systems and let the structure speak. If you believe in the power of systems and align with this direction, we welcome deeper conversations. We're still refining, still expanding, and we hope to stand alongside those who see the next structure forming. Thank you all for your time and attention. That concludes today's presentation.